um, you're off. So as I mentioned, hello everyone. Welcome to Legally Yours and Silicon Beach Australia's virtual lunch and learn session on US expansion. To flip up or not to flip up? That is the question. It's very Shakespearean. I love it. Before we get started into the official proceedings today, in the spirit of reconciliation, I would like to acknowledge the traditional custodians of the land that I am standing on here today, which is the Boon Boon Rawong and the Wurundjeri Woiwurrung peoples of the Eastern Kulin Nation. And I acknowledge that sovereignty of this land has never been ceded. It always was and always will be Aboriginal land, and I pay respect to their elders, past, present and emerging, and extend that respect to all Aboriginal and Torres Strait Islander people of today. I'd also like to acknowledge the community sponsors of Silicon Beach who enable events like this to happen. But I'm actually going to hand over to David to maybe say a few words. Or did you want me to do that, David?
I will do it. I'm already here anyway. Thank you, Karen. And welcome, everyone, and especially welcome, Anthony. I still have your last session in my mind. It was such good content and great. So if anyone here in the audience haven't seen Anthony's last session, Navigating Funding Negotiations for Founders, it's on our YouTube channel and you should definitely check it out. Some of the best stuff that we have on there. But for now, I just want to say hi, invite you to enjoy the next 40, 50 minutes. And I would also invite you to join us tomorrow if you're in Melbourne in the CBD at 5 p.m. We're having a live pitch night at Melbourne Connect. I will post the link for it, for the tickets here in the chat. And it would be awesome if you would join us there. And of course, at any of our other future events. But I'm not holding you back any longer. Back to you, Karen and Anthony, please.
Oh, thanks, David. It's great to have you here. So just a little bit of info on me for those who might not know who I am. Obviously, my name is Karen Finch. I'm a non-practicing lawyer, which doesn't mean that I've perfected it. It just means that I no longer deliver legal services. Had to always qualify that one to my 20s. I'm the CEO of Legally Yours, a board member of the Australian Legal Technology Association. I'm the committee chair of Walter, which is the Women of Australian Legal Tech. And I'm also a legal tech editor for ID Spies. But put all that stuff together, and obviously I do these events with Silicon Beach. I'm very, very passionate about progressive law, about legal technology, and supporting the startup community here in Australia. A little bit of info on Legally Yours and why you might want to look into it. So we are Australia's leading legal marketplace. So we're an online marketplace that enables everyday Australians to access quality experienced lawyers like Anthony, all without the bill shock. So we take the confusion and difficulty in trying to find the right lawyer by matching you with vetted, experienced lawyers who only offer upfront fixed pricing on their legal services. And that's across all areas of law. So it could be for your startup, but it also could be for your will or a property or a family law matter. It's the full gambit. So before you Google search, I need a lawyer, kind of head in and give us a go at legalyours.com.au and let us match you with the right lawyer with no bill shock guaranteed. All right, that's all enough about that. Let's actually talk about why we're here today. So in this session, the incredible Anthony Curtin from Merton Lawyers is going to discuss the legal and commercial considerations and challenges that every founder must consider when expanding to the US, including making the decision on whether to flip up or not flip up. So key learnings from this session that we hope you will take away is what exactly is a flip up? Why would you do it? What are some of the benefits and challenges? What are the practical realities you will face when flipping up? Do US investors expect this? Who should you be speaking to? Why you should and shouldn't? Financial and time costs associated with flipping up, and some case studies too. And on to our presenter today. So the Merton corporate team was founded and is led by Anthony Curtin. Prior to Merton's, Anthony led his own corporate and legal practice and worked at a top-tier law firm in Sydney, Australia. He has advised many local and international clients and has been selected to mentor or sit on the committee of a number of groups, including La Trobe University's Business School, Melbourne Accelerator Program, Launch Vic, Foundation of Young Australians, and Pangea Global Health Education. In addition to his legal work, Anthony has founded or invested in a number of startups around Australia, and he is so well poised to take this session. Anthony, welcome.
Thanks, Karen. Yeah, thanks a lot for that. And David, thanks for the really kind words.
Over to you to get us started on this topic.
You cut to me a bit sooner than I expected. So yeah.
I will just mention though to everybody, if you have questions, I know I've run these sessions 100 times with Anthony, and I know he loves being interrupted by me on screen when I come in with a good question. So please put those questions in the chat. I'm very happy to interrupt, and we can also have, feel free to also unmute at particular times if you'd like at the end. So Anthony, over to you.
Yeah, thanks, Karen. And yeah, thanks for everyone for joining today. I know I always say this, but there's a lot of ways you can choose to spend your lunch times, and I really appreciate everyone joining today. We really try to make these as interesting and practical. We try to minimise the amount of law that we talk about, and really talk about some of the practical considerations, but also the first-hand considerations. Also, obviously, like to thank Silicon Beach, Dave. You've done an amazing job. Thanks so much for all that. And Karen, I've just had laser eye surgery, so it may be the temazepam speaking, but thanks a lot for all your continued help. Karen's done an amazing job with the law community in general, and also just a fantastic person to work with, and we're really lucky at Merton to have been there for a long time with her, and yeah, so thanks. So yeah, and I do have to just note, this is the first time that I'm coming out without glasses. I had laser eye surgery a couple of weeks ago, and just a heads up, people say your recovery should be a week. It's not. So just it's not. Anyway, a very positive experience anyway, and here I am. So if I'm looking in other directions, don't worry, it's not you, it's the surgery. Anyway, guys, look, thanks for taking the time to come along. The topic today is around the flip up or not to flip up. We tried to be a little bit creative with that is the question, but really the theme of today is around obviously that US part, the US expansion. That's been something that we're really passionate about at Merton Lawyers. A lot of the lawyers that work with us are all either founders or they've worked within our own investments, or for a period of time. We try to be as commercial as possible. We do have, obviously, lead the corporate team, but I also lead the newly formed US expansion group as well, where we go out there and really our goal is to make Australian founders more successful landing into the US. And the way we do that is a number of ways. I'll go through just one of the services we have, but Merton's in general, as I said, I lead the corporate team. We've got a litigation and property team as well. My background is, as Karen more succinctly said than I will, I'm also the managing partner. My practice area, and particularly the corporate group, is we just work with founders and investors of emerging growth companies. I've founded a number of businesses and still have a number of those businesses from the early days. I've also had a lot of experience in ones that just didn't work out, probably more from that product market fit perspective. But it was obviously part of my learning, and one of the things I'm very grateful for. But at the moment, obviously I'm a lawyer, but I continue to invest in a number of businesses as well. Now, one of the reasons why, I get asked a lot is, why would I be in a position to be speaking about the US? Apart from my absolute obsession with US sport and early 90s sitcoms, I do have an absolute fascination with it. I really, I love seeing some of the stories of Australians, everything from Vizzy to Atlassian, heading over there, and some of our clients as well that head over to the US and really have a crack. And one of the things that, we wanted to do at Merton's over the last 2 years, we made the decision, particularly through COVID, was to be more of a practical assistance to our clients and something more than just law. And what we did was 12 months ago, we started to understand a bit more about our clients, a bit more about the community from a venture capital, from a founder, from a startup perspective. And we undertook some customer interviews similar to a lean startup methodology, and tried to really pinpoint some pain points about how we could, help some of this community. And what we've done over the last 5 or 6 years, we've really developed some great relationships with not only the tech community in the US, but also particularly the Silicon Valley's best law firms. And I'm not sure if really many of you would probably know, they're very US centric, but these are the guys that incorporated Google, that are up against it with Twitter and Elon Musk. And the reason why we've gone and done built these relationships is one, to help Australian founders land more successfully and get their structuring right, which we'll get through today on the flip up. Also to help them acclimatise a bit better in the US, but thirdly, to really open up opportunities, whether it be customers or networks, particularly with investors. And we can go through some case studies in that. But on the back of these relationships, we founded a service at Merton Lawyers called Project Frontier, which we launched in beta for just our existing clients in earlier this year in February. We now have 47 companies within the program, and essentially what we do is it's something that we don't charge for, but we help based on our relationships and based on our customer interviews. We develop this where we've got a panel of essentially five of the best US law firms in Silicon Valley, and what we do is based on the needs of the founders and the companies, we introduce them to the best suited lawyers. And what that does is it goes back to our goal of helping them land more successfully. We've also been supported by Austrade, Invest New South Wales and Global Victoria to do this. And we've had some amazing stories so far. Obviously, just minimising the cost and also the time frame of doing a cap raise over there and establishing themselves, but also just helping the founder a lot more from a time perspective, which can be pretty draining for them and overwhelming. So there's been some great positions there. So I don't want to go too much into all that. I hope that gives you a bit of an idea around our background. But look, I think it's just important that we acknowledge some of the recent environments. Obviously, COVID's been that was a thing. It still is. We've also had so that was a huge thing in our environment. We also had fiscal and monetary stimulus. There's low interest rates, which are now obviously being changed. Deferred payments, job seeker. US was printing money. Huge, dramatic increases in price pressures and supply chain issues. And we obviously had the war in Ukraine, federal election earlier this year, and the property market correction. So what we're seeing now is that there's capital is what was free is now become expensive. And there's been a drop. There's been a 61% of all software, internet and fintech companies are trading below pre-pandemic 2020 prices. And in Australia, there's been a 52% decline in valuations in June from the same month last year. So one of the big key outcomes of all this, and I really encourage you to read that Sequoia Capital, Adapting to Endure, that FOMO within the investment community, is particularly in the US, is diminishing. You can also see last year, it was just crazy in terms of the global venture, how much money was actually being raised. I think, there was a 4% year-on-year growth of venture money that was being raised from 2012. There was a 92% year-on-year change from 2020 to 2021. And I was actually recently interviewed about this, and I would say that, you know, obviously it's a year like no other, but one of the things I would say is it's really important to put some perspective in the investment at the moment, particularly in the US and here. And a lot of the feedback we're getting from our relationships in the US is that, yes, there's been a correction, but we're probably going back to more of a normal perspective at the moment, as opposed to just an absolute drop. Now, we're really fortunate now through Project Frontier to be able to be speaking, you know, on nearly on a daily basis with some of Silicon Valley's best law firms and most connected groups. And this was one of the quotes that was said to us recently about the days of raising at a $200 million valuation for a pre-revenue company are over. And I think that's really important to understand, is that it was pretty crazy at the end of last year, and we are going back to normal. And I think what we really need to put in perspective is what is normal. So I think what's really important now, we're going to be talking a lot about this US expansion, and just stick with me. One of the things is that we're really going through here is what we want to talk about is putting that perspective about what is normal. You know, one of the key questions is, why should a US investor look at you? And I think that flip up question is something that we're going to look at down in the next couple of slides. But I think it's really important to also, because there are certain scenarios where that flip up occurs, and just so that we're all clear, a flip up essentially is where you move from an Australian parent company, so you've got the headco, and that flips up into a US entity. And you essentially now move from being, in very general terms, an Australian entity to a US entity. And that, as we'll get into, is sometimes one of the conditions of US investors. And we'll get into why, and we'll get into some of the practical considerations, but also importantly, when to do it. So why, I mean, you know, at the moment, I think it goes without saying, profitability is huge. And I think it's a very good thing that's happened, that we're now looking more at, we're being a bit more sensible. Due diligence is coming back in. Last year was pretty crazy, to be honest, the lack of due diligence that was being done. I think, you know, there's been some reports in the papers and some pretty amazing quotes from some of our local VCs just around how they overlooked due diligence, and really they won't know the outcomes of that until really the life cycle of a fund, which can be 10 years. So it'll be interesting to see how that all unravels, but that is definitely coming back in, and that's something that we'll go through. Investors in the US are also looking for introductions from trusted advisors. So that deal flow that's coming through, yes, you know, that flip up question is a big one, but they're also wanting to get introductions from key people like the panel members on the Project Frontier. There's also been more of a leveraged position from investors. They're taking longer to come back, and it is a take it or leave it approach. But they are expecting resilience in founders. They also want to know what you've done before. There's a real emphasis on that. We had a really interesting discussion the other day around, for one of our clients, it's expanded to the US, and they wanted to emphasize in their pitch to investors the company that he built 10 years ago that lasted for 3 years and built into a national product, but he just overlooked for a period of time. They also want to know what you're going to be doing with the money. And then the investment part is also a big piece now. And what was, you know, around a minimum of 20% now is looking around that 22 to 25%. Now, just also, I really want to reiterate, a lot of this information that we put out into this presentation is directly coming from the US. I just want to be very clear with everyone. One, I'm not a US tax advisor. I'm not a US lawyer. This is all first-hand information from people on the ground in the US, and really the people that are at the coalface of negotiating these terms. I also want to point out one of the panel members who has built some fantastic content on the web. His name's Daniel Glazer. He's actually the head of the London office for Wilson Sonsini. He's done some fantastic bits of work. I work more with his contemporaries in Silicon Valley, but he is an absolute doyen in terms of US expansion. So I think one of the things for you guys as well, if you're looking down that path of investment, what stage of investment are you at? Are you at a seed round? Sorry, there was meant to be a B at the end of that, but are you at a seed, Series A, Series B? And I think one of the things, and this is, I'm going to quote Daniel Glazer a lot here, so please note all the footnotes there. But one of the points that he made recently, which I thought was, and this is something that a lot of if you are looking to expand to the US, particularly in that seed or Series A round, VCs in the US, they obviously see that as much more of a risk, and they're more likely to be investing. And this is based on a lot of the feedback. If you have people on the ground or there's significant revenue in the US, that's why you'd probably see at a Series B level, a US VC is more likely to invest because there's more traction there. There's already more due diligence there. There's probably lead investors that they know that they can get intel from. But when it's at that real early stage, it's really important that you have one of those two parts. So I think some of the key questions you really need to ask yourself, why are you expanding to the US? Is it to launch in the US, to launch a service? Is it to raise money? Are you providing another entity where you'd be providing equity to US employees? It's really important to understand that because if you are raising money, there are going to be certain conditions that a US VC will want to see, or an investor. But we've got clients as well that aren't raising money in the US and they're just launching over there. They've got significant revenue. They don't need that heavy investment from the US. They've got good investors behind them in Australia. But what they're really looking to do is launch into the US. And again, back to that flip up question, it really comes down to where you're at in terms of what the key reason is why you're actually expanding to the US. So a lot of people that come to us, particularly through Frontier, they come to us and they say, we had someone yesterday and they said, we're going to set up in the US and we're going to do a flip up, and we'll get into advantages, disadvantages, and that's all okay. We feel that there are certain scenarios where that needs to happen, but you really need to. The thing with the US, and again, I'm not an advisor in this area, but it is a complicated place in terms of responsibilities with taxation. There's also different ways that it's regulated over there. Also just the administration of running employees over there, where you set up your company. So whether it's set up in certain states, there's also obviously potential tax issues where you set up in Australia and you've set up in the US and you haven't joined them, or you've set up in Australia and you continue to operate through the US. We've had clients that have come to us after the fact, and where there's potential for double taxation. So you're getting taxed at the parent and also taxed in America as well. So it's really important that you get that done first, but also you understand the longer term view and the longer term reason why you are actually setting up there. Liability is also a big one. If you're trying to set up in the US and you're trying to cordon off a part of the market and not impact the parent company in Australia, you might want to set up a company in the US and minimize your liability that way. It will automatically limit your liability in terms of operating an American entity in the US. I would just say, though, that you need to get a good team around you to understand a lot of the state and federal taxation issues. We work really closely with some great corporate advisors over there that work on both sides of the pond. But I would say they don't suffer fools over there, and it's really important. The employment laws as well in Australia and the US is incredibly important to understand, because a lot of people come to us and they say, we're going to be setting up an entity here, and then we're going to be heading over to the US, and we're just going to put a contractor into the US. And that's okay. And as Daniel Glazer said in one of his presentations recently, that, it's similar to Australia here, that if you are placing a contractor over there, but they're deemed an employee based on the way that it's all structured, that the way that they're operating, you can be then up for significant penalties, particularly also payroll taxes. And it's really important that you just get that right. And I think one of the things is there are times and places to set up an entity and operate over there, and sometimes there's an opportunity not to. But I think you really need that specific advice and to be able to monitor where you're at as a business in the US to make better decisions, and when to actually set it up and when to expand it. One of the parts that always comes up for us, and we recently had, again, clients that have come through after the fact. So there's been a bit of work that we've had to do there, but there's always, questions around which US state that you'd be setting up in. Now, it's interesting. Most people do have that. A lot of people do have questions around that. A lot of people also know the actual outcome, which is there's obviously a Delaware corporation or LLC. But one of the things that you really need to understand is if you are looking to set up, particularly if you're hiring an employee over there, there are federal and there's going to be state considerations. We had a client recently that I was just about to elaborate on, who is a huge NBA fan, and they set up a Texas entity over the recommended solution from one of the panel members, on the basis that they're huge NBA fans and they knew through all the salary and taxation discussions on ESPN that there were good tax outcomes in Texas because of the way that they're treated NBA players. Now, I would say that's probably not the best advice, and a good example as well of people probably trying to minimise their expenses with setting up. I would say that you really, the solution there is, and I would say that it has to be, and this is based on advice to us, there has to be a very good reason why you wouldn't do this. But essentially what you'd be setting up is a Delaware corporation or an LLC, wholly owned subsidiary of an Australian parent company, as opposed to anything else. Now, when you do then go and set up across somewhere else in the US, you do need to register, particularly if you've got employees in those specific states. And we recommend you get advice on that as to how. But the thing with Delaware, and it's a smart move that Delaware have made, is that is really the closest that the US has to a national corporation, and essentially it is the default option for companies being set up over there. But that I would be saying, if there's any other option, do not be. I'll be getting some advice around that. The one thing that sorry, I'm just. So I think the part that we see a lot with clients, and this is the feedback that we get, is there's a lot, and Daniel Glazer goes on about this a lot, that there's a lot of companies online where you can set up entities very easily over there. I think that's okay if you are an entity, if you're an Australian, a US resident and you're setting up over there. I think there are some really key practical issues that you need to have when you are setting up over there, particularly if you are expanding to the US. It is moving from a complicated structure in Australia to an American group. And really what you need to be taking on board is that there's more and more admin, not just the setup of the entity. So you really need to be speaking to a good US lawyer for specifics, particularly around employment law and registering contracts, as well as data privacy. So the data privacy in the US is state by state. So it's really, really important that you monitor that. And there's going to be significant changes in the near future for that. One of the other parts that Wilson Sonsini proposed recently in one of their presentations is also if you are providing equity. So the scenario that we're talking about here is where the Australian entity is up top and then you've got the Delaware LLC below. And if you are employing people in the US and you're providing shares on that basis to them, they'll be wanting to get equity in that parent company. Now, again, it's really important that, one, you consider that. Secondly, you consider any taxation issues from a US and Australian perspective. And that's also being taken into account when you're putting together a share scheme, if that is what you're doing. So there's a lot of moving pieces here with setting up in the US, but and it does go beyond just the setup. Now, let's just have a discussion now just around that flip up question. Now, I would say, and this is, there are specific reasons to do a flip up. The scenario we spoke about before is where you keep the Australian entity and you have a Delaware LLC or a corporation. Now, it's really important that you understand where you are in the life cycle and the opportunity cost of actually doing a flip up. Now, a flip up, essentially, as we mentioned before, is where an Australian parent company flips up into a Delaware company. So you then all become a group, an American entity. Now, we see, as mentioned before, feedback from a lot of our partners in the US is that you need to be at that, depending on the risk profile of the business. They're happy occasionally to be investing in an Australian entity if they're a US VC. But we're seeing also a lot of scenarios where VCs are making it conditional on their investment coming in on the basis that they flip up. We're also seeing a lot of Australian companies coming straight to us and saying, we're flipping up without any taxation advice, any consideration, and also I'd say not even any real reasoning, any good reasoning as to why they should flip up. From a US investor's perspective, the reason why they would want that is obviously risk profile. They have, years, decades of investing into US entities. And that's just part of their profile. It's part of their investment thesis. When they set up a fund, part of that is that they will make it conditional that you need to flip up into an American entity. So a lot of the time that decision-making is being taken out of their hands. And that's the reason why LPs or high net worths might be investing directly into their funds on the basis that they do flip up. There's also certainty around jurisdiction. So in the event someone does get sued or there's something that they can do, they're not having to go to Australia or Singapore or UK to take action. But we are seeing also at that earlier stage, there is a requirement to flip. Now, we also see a number of people coming through, whether it be the panel members or whether it be Australian founders or US investors. And, people always say that you have to flip up. I would say it's obviously not the case. I hope I've made that clear. The reason why a lot of Australians don't need to be flipping up is, I think we there's a number of businesses that we should be paying our respects to on this basis, but one of them is Atlassian. And Atlassian had a number of, they obviously did it, they listed eventually, but through their cap raising process, they were one of the very first that didn't flip up. And their feedback was on the basis, well, if we're going to be flipping up, then the majority of our employment is going to be moving offshore. And that's where all our talent lies. And I think that was a bit of an aha moment for a lot of the US investors when they started to see, okay, well, that's actually a bigger risk if we don't invest in it, and we lose a lot of the talent. So what happened is they then stayed as is, and that really trickled through. And now we're seeing more and more of those businesses not flipping up, and US investors becoming more and more comfortable with investment into Australian companies or international companies. What I would say, though, is, again, those earlier stage companies where there's a higher risk, there is more and more of an opportunity and a reason for the investor to request that there is a flip up. I think you need to also, again, put this all in perspective. If you're getting a term sheet from a US investor that's putting these are some of the considerations we've listed below. If they are a top tier VC, so they've got strategic support and they've got runs on the board, they're also got good deal terms. They're also giving you a significant amount of money. Then, and there's good tax considerations and there's potential for an exit at the end. It is very important to put it in perspective, because if you tick the box on all of those, then you're in a good position. And the basis of flipping up, in my opinion, is just that it's good business. And the alternative is that you stay in Australian business and you don't get the strategic support of the US investor, and you might you don't get the investment amount coming in. So I think, although flipping up can seem daunting, I think it's really important that you keep it in perspective. And I feel at times it is the cost of doing business if it is the right investor. But the disadvantages of flipping up, I think, really need to be put in perspective. And I've got two very, very simple case studies after this to be putting in for you guys, just to illustrate what happened recently to two of our clients. So the disadvantages for flipping up, it can be costly. We've had clients that have, it's taken an enormous amount of money for an early stage business to flip up, when really there wasn't a reason to be doing it. They could have probably been putting that money into better use to accelerate the business locally, and then look to getting a bit more of a sophisticated VC or investor in the US. Although people say it doesn't take time, sometimes it can, particularly if you've got a crowdfunding group of investors and you need to get disclosure to them. So it really does take time. The tax considerations are also add to that time as well. It's not always that clear, and a lot of your shareholders will want to get an understanding around what their tax issues will be. So again, that takes time, and unfortunately sometimes you can have shareholders that will leverage off this flip up and not want to do it, and on that basis leverage potential purchases of their shares or whatever. But it can be a very, I would summarize by saying that you can take your eye off the prize for a period of time if you are flipping up. But, as I said before, it may only be the option that you've got in front of you. And like it or lump it, you might just have to do it. And that is one of the things that a lot of Australian founders have found themselves in. And that's why, sometimes we had a founder the other day just say to us, we flipped up, but the alternative was that we're going to shut down. And that's okay. I get it. But it is one of the considerations. This can also be an advantage, but also a disadvantage, but also the currency exchange is really important to understand as well when you are flipping up. And because during that time, there can be a number of problems that happen globally. There can be huge changes in currency that once you do flip up, and you might get the amount of money invested back into the business, but it just turns out that it's the impact, you've lost a lot on the exchange. So it is really important that you take a lot of that time. But I would say to understand a lot of this, it's really important that you get a good team around you, and not to be, I've only just come up with this, but not to be too flippant about a flip up. Now, this is one of the...
That's the quote I'm putting on the social media post, by the way.
Right. Okay, yeah. I developed a lisp after doing that. So I will, Alex, I think it's Alex. Yeah, I'll get back to your question shortly at the end. But I do want to highlight, we had 2 clients recently where I felt that there was a good reason to flip up, and there was a good reason not to flip up. So, we advise throughout the whole life cycle of a company. And we had recently a very early stage business that was, it had a small amount of revenue. It had no presence in the US, but it was a very good business in terms of if you were looking at a startup. And what happened is they got accepted into an US accelerated program, which is an amazing achievement by these guys. They are young. And one of the investment that was made into them was around 50 to 150,000. That was what the accelerator program does. But for them, it was becoming conditional that they become a flip up, or they flip up. The issue there is, in my opinion, one is the accelerator program is a great accelerator program, but first I'd question whether they truly are making it conditional that they are requiring them to flip up. The reason why I say that is it's not always the case. But for this, and you have a right to ask that as well with a US investor. Secondly, they also got themselves into a position where that amount of money could quickly be wiped out in terms of opportunity cost and in terms of time and financial sorry, I'm just getting messages separately about this. I'm not even sorry, but that amount of money would quickly be eaten up on the basis of time and money. And I would say the opportunity cost would be blown out of the water on the basis that they flipped up. The other issue is that you've then got an American entity, your risk profile, and you're based in Australia, and your risk profile increases dramatically, and also the administration. So there's ongoing compliance that they would need a team around them. Also, I think they would be almost, I mean, this is my opinion, they would have been almost better to take that investment and take it out themselves and accelerate the business a bit more, to again go back and then go to the US with a more sophisticated product, because I think it didn't work out. They're still going through the process. I'm not, but I would just be really wary, because the other issue is that everyone has the bright lights of the US, but the issue comes down to when they see that they head over there, but really there isn't necessarily a reason to be heading over in the first place. And that's actually quite a confronting issue for a founder, and we've seen it, where essentially they go over the US, they flip up, and then all of a sudden they realize that essentially they are an Australian-centric product based at best out of Southeast Asia with an American entity now, and they've had to do the reverse. Now, that's not an issue, but it's a time waster and it costs money. So in this scenario, I think you really need to think about whether or not it is a good scenario to flip up. The second case study we've got is from one of our clients recently who came through Project Frontier, and we're really proud of these guys. And this was actually where the idea came from. And they worked closely with one of our panel members and was successfully able to get investment. They're successfully negotiating a number of term sheets. But I think what happened here was, this is a different scenario altogether. They've had traction here. They've got term sheets coming at them from tier 1 US venture capital. They're looking at around $42 million investment, but they've got a condition that they will they will flip up. Now, this is a different scenario because really the cap table is pretty straightforward. They've got a significant amount of money on the table. The alternative is that they stay in Australia, where they wouldn't raise that money based on where they're at as a business. Given the market opportunity over there and given the capabilities and caliber of the investors, for these guys, it makes so much more sense. So I think depending on the quality, the amount of the investment and where you're at as a business, it's hugely important. These guys are going through that process at the moment. And also they've got good taxation advice throughout the whole piece. But most importantly, the advisors that they've got, which honestly came through Frontier, have opened up their Rolodex and been incredible to helping them land more successfully in the US. Now, the other part that I would really encourage you all to take into consideration, we've spoken about lawyers, but these are the other parts that you really need to be considering when you're heading over to the US and considering a flip up. So I'm just checking the time. One, get good accountants. Accounting over there, state and federal, is really important to stay on top of that and minimise the issue around double taxation. Banking, banking is notoriously difficult over there. We work really closely with Silicon Valley Bank. They are incredible. They also have a very good link into Australia and the US, where they've got a service specifically for that. Also updating your insurance, making sure that if you do set up that Delaware or however you do it, flip up, or you keep it as a subsidiary, that has got the right insurance requirements. Retirement savings over there, the equivalent of super. And also, if you are employing people over there, health insurance. This is something really important to consider. Lastly, what I would say is, heading over there, we feel the people that do the best heading into the US get due diligence ready, because it happens so quickly over there. And if you are lucky enough to get to a position where you are getting investment or you're even getting clients, it's best process to understand who your advisors are, how your decisions are made, particularly for insurance. Are you going to be taking on any property or leasing? What are your material contracts? Are they properly engaged? That is what the VCs will want to see. Intellectual property, is that assigned properly for is there a technology person that worked on your business that hasn't got a contract. If an investor sees that, I'll want to ensure that that's been assigned properly and quickly. Regulatory consents, of course, again, around that compliance piece. Borrowings, get your finances and everything up to scratch, because the US investors will make that conditional, as they will also in Australia. Employees, make sure that that is being sorted out from a contractor to an employee perspective, and be really transparent about any disputes and litigation. Look, I'm sorry, I'm kind of going a bit quick here, but I just didn't realise the time. But look, next steps, we love talking about all this stuff. I'm really passionate about it. So please feel free to reach out if there's any questions you've got about that. And yeah, we're more than happy to discuss Frontier with you guys and go through any questions that you may have. But I would just say, yeah, please, don't be, if you are going over to the US, be really specific about how and strategic as to why you're doing it. And also try and do as much work as possible here at the front end before you land there. I think one of the bits of feedback we got for all our interviews from founders when they expanded was just they totally didn't foresee the scale of America and the impact and the expectations and the pace at which it goes. And that goes for everything from introductions to investment to advisory to customers. So I think it's, and I know there's a lot of people out there that would be, encouraging you just to set up a company online. Our position is just get some good advisors over there, particularly people that are connected. And they will, it's a fantastic system over there in America. We love working with them. And they do open up their opportunities where possible. But it really comes back to you guys also doing all that work at the front end.
Anthony, I
yes.
think that's a great thing. Let's ask some questions.
Okay.
So much information. So Alex has put some questions in. So Alex, are you happy for me to ask those on your behalf from the chat? You can.
I just didn't want to, I could ask them verbally.
Yeah,
I just didn't want to interrupt the presentation. But the two questions that I asked, the one thing that I just wanted to ask before either of that, when you talk about these flip ups and you talk about them costing an inordinate amount of money, like being very expensive, ballpark, are we talking the tens of thousands of dollars? Are we talking hundreds of thousands of dollars? Like, just as an indication.
Yeah, I mean, look,
what's a shitload of money in this context?
Yeah, sure. No, I understand that. It really comes down. It does, and I know everyone's going to say it really does depend, because it can cost, depending on where you're at as a business, but also how many shareholders you've got. So I'll give you an example. And a lot of the costing as well is not done by us. So I will be totally transparent here. Like a lot of the work is done by the US advisors. What we have done is really try to create a scenario where we've put you in touch with the people that make the best decisions. So it can cost tens of thousands, but I've also seen it where it's costed over 100,000 on the basis that there was a very complicated tax structure. There was an enormous amount of shareholders, which were also very stubborn, which stretched out the negotiation. So, and the way I would have overcome that as a founder is I would have been just more transparent with the shareholders initially, as opposed to just hitting them with, this is what we're doing. A lot of the time, and we see it in law just in general, you need to be just really transparent with people up front, and a lot of the time it just falls down into communication. So yeah, I think the other part that gets taken out a lot is the time as well. Regardless, like once you get the ball rolling on, once you've decided on a flip up, you've got all the considerations and it's moving. It doesn't actually take long, but to get to that point, it's the time is a part. And you can say it's not going to take that long, but it does, because you can have a shareholder that doesn't want it to do it. You can have an investor that's making it complicated. So it's really important that you've got good people around you that can help you make those decisions. I hope that answers it.
Yeah, it does. It sounds like a smaller cap table makes it easier.
Yeah, I would love. Yeah, I could expand on one of our clients at the moment, and it's quite arduous. What was it? So, did you have another?
I had two that were written down. Did anybody else have any others? Otherwise, I'll give mine.
I think just with time, why don't you ask them, Alex? And
sure. So, I'll ask the second one first. So one was, do you have an opinion on these employer of record companies like remote.com and Deal and how they can do the employment for you? And do they help solve the employment problem that you were raising?
No, yeah, I do. And this is, again, based on, I would say, depending, they don't, because they don't monitor, like, let's just say that they, and I'm not entirely sure about these groups, but the issue you've got there is, I forgot the name of it, but registering the actual contract with the specific states becomes an issue. Also, the intellectual property is really important there. I'm not I wouldn't be taking over. I know in some states, in America, you've got certain limitations on non-solicitation as well as ownership of IP. So it's really important that I understand what these guys are doing off the shelf and everything like that, but it's super important that you get a US employment lawyer to be sorting out that stuff, because those businesses are good for when you're based in America and you've got a very simple structure. But generally with an Australian business, you're an Australian entity that's got a subsidiary or you flipped up and you're heading over to the US, and you don't, with generally a remote group of workers, and you don't necessarily know where they'll be working or when, or technically whether they're going to be a contractor or an employee. So I would say that's my opinion. We've got a number of examples like that, but I would say, as much as possible, invest in an advisor that can help you with those, because it's not that much of an issue, but it can be a huge issue if you don't do it properly.
Yeah, I didn't think about the IP perspective, but if you've got a proper employment contract, you're protected. If somebody else employs them, you're not, and it's completely different. I didn't think about that.
It's also just the state by state. So you can't, you've got a specific employer, and like I'm not an advisor in this, but this is just through our experiences, but you need to be really aware of the state by state regulations in employment, because it's very different there. And it's also in terms of termination, it's very, very different. So I think,
makes sense.
Yeah. And that's where, if I'm a US investor, that's where I'll be looking, because that's where a huge risk lies in the employees and contractors that have access to intellectual property within your business.
The other question that I had was, if you're looking to flip up and move and start launch in the US, do you physically need to be there in order to be successful, or have you heard stories of people trying to manage it from Australia? And
I think that is a really, really good question. And I would say, and I'm sure there are people that have done it successfully, but I cannot remember anyone. That, honestly, like, I'm not being facetious here. Like, Americans just will not, they just won't even take a meeting unless you're over there on the ground, showing that you've got skin in the game. Like, they want to see a strategy that you're going to be there, or someone's going to be there, or that there's revenue or something. But I had a meeting yesterday with a group who we put through Frontier on the basis that they're based in India and they're based in Australia, they're headquartered in Australia. They are going to hit America, but they're going to do it after around 3 to 6 months, because they're going to set up structurally and start shipping out through the Australian entity first. But I would say that is really just a small MVP for them, just to kickstart it, to see whether it's going to work. But the advice to them is quickly get over there as soon as you can, or be on the ground in the next while you're doing that, just for a period of time.
Now we have hit over the 1:30 mark, so I might actually stop the recording and just do the thank yous. And if we want to stay on for a bit longer, we can. So I just actually concur with that, though, Anthony. We've had a number of Women of Australian Legal Technology members go to the US, expand to the US, and they all go over. They all go over. They spend several months a year. So Jodie Baker from Zaki is one, and certainly Laura Keeley from the mediation. So I know it's something that we're talking about in the Women of Australian Legal Tech community. So anyway, there you go. I agree. I can't think of anyone that hasn't kind of done that. Same with Joseph Legal.
And you get to hang out in America.
Oh, I know.
San Francisco and New York. How good.
I know how good's that. Anthony, thank you as always. You know how much I adore and love you. You are so generous with your information. Thanks, and your passion for helping startups and sharing this information is just incredible. I really encourage you to go and connect with Anthony and with the team at Merton Lawyers. They're the best in the biz to do this, and they will take great care of you and make sure it's done the right way. So thank you, everyone. Thank you for Silicon Beach. Thank you, David. Thank you for those that attended, and thank you for those that are watching. We'll be back with another legal information session very soon. Thank you.